The news flow this morning. Once again, we've got DP Singh, Deputy MD at SBI Mutual Fund, joining in on the show right now. Mr. Singh, thank you so much for your time. Good morning. And, what better news this weekend? Firstly, on, India front, the fact that both the countries have agreed to a ceasefire must bring a lot of relief to investors as well, because we did see markets fairly jittery last week.
Yes, of course, it's a big relief for all the investing community. And of course, nobody wants a war, a conflict kind of situation because that not only impacts sentiments, it impacts the economy also in a big way. I think it has come as a relief. So we hope that business will be as usual now. And of course, we being the long-term player, the mutual funds always being the long-term player. So we'll not be looking at any trading opportunities, but yes, a big positive for the markets.
Sure. On the other hand, of course, Mr. Singh, there's also news that US and China could have finally struck a trade deal on tariffs. The announcement, of course, and the nitty-gritties and the nuances will be announced when they hold a press conference later today, our time. But that as well, you think a big overhang gets lifted from the market minds?
Yes, of course, that is because a growing economy like ours always gets benefited by the overall stable situation across the globe. And these kind of jittery conditions, what were prevailing between US, China, and so many other places, that's likely to be over very soon. And we should concentrate on our businesses. We should concentrate on what we have done with UK, what we are doing with USA. See, those kind of positives we will look forward from now onwards, hoping that everything will be calm, peaceful at the end of our borders. I think it's the moment to move on with positivity.
All right. Hi, good morning, Mr. Singh. This is Shrishti also joining in. But Mr. Singh, help us understand what should be the strategy for the Indian investors right now. Well, of course, a lot of moving parts when it comes to the geopolitical situation turning up. But on the flip side, a lot of positive too. Like we were highlighting, the global cues are turning positive. We have that India-UK trade deal also that went through. How should investors place their bets?
See, investors, as usual, we always say that investors should continue investing money in Indian market for a long-term perspective, and that golden rule continues. And a lot of positives for India post ceasefire. We have seen our strengths, we have seen our some of the weaknesses. Of course, the whatever will be there will be analyzed over the period of time. So I think this is the moment to consolidate and investors should continue to put in money. You have seen the last month's number. The SIP investors are continue to put in money, but for the big ticket, the HNI investors and the lump sum money which was awaiting us, I hope that those kind of monies will also start coming into the market now.
Mr. Singh, what's your own analysis? Where do you think money or money will find its way, and where do you think money is to be made? Because up until now, what one has seen is that there's almost a consensus towards banks. But do you think there will be some bottom-up stories? There's some clarity coming in on, pharma tariffs as well. Do you think maybe bottom-up, under-owned sectors will now make a comeback?
Well, it's very difficult to talk about the sectors, but bottom-up stories are always there. There are good companies with a good management, good perspective, growth perspective, which remain across the sectors. And we, as the fund house, always look for those opportunities. It depends upon how strong, how competent your research team is. There's a way to go and find out the good companies and start investing in the infancy stage to create wealth for the investors. And I'm very confident that we are the ones we who can do it. The mutual fund industry overall has got a very strong research bias. I think for the investors looking at the mutual funds is a way to go forward. But only thing is that the number of listed companies is little something which is awaiting us. We need more and more listed companies. And as per the regulations, we can invest only in the listed space. So that is something which we are working on along with the regulator as an industry also, how more and more companies can be brought into the public space. I think it's all positive win-win for the investors going forward.
Mr. Singh, investors, after the correction which played out until the month of March, had gotten very wary, and pretty much everyone was taking concentrated moves within large caps. Do you think it's now time to shift some allocation to small and mid caps, or do you think large caps and flexi caps are still the way to go?
As I told you, this sector specific, same way cap specific, also it's very difficult to take a call. Definitely because number of companies are more in mid and small cap. So naturally the find in those sectors will be more. So it's better to be into the flexi caps or multi cap kind of funds, which have both large cap, mid and small cap, and to some extent in multi asset allocation fund commodities as well. I think it's better to play that game rather than getting into only in small cap, mid cap, or only in the large cap fund. Let it be done by the experts who are there in the fund houses, and they will take care of it.
Mr. Singh, thank you so much for your time today. Great speaking with you.
Thank you. Thank you so
Thank
much.
you.
If you like this video, then like, share and subscribe to ET Now.